Hello and welcome to our leadership and development session for today. Looking forward to hosting you. The topic for today is around turnaround strategies that can be adopted by our boards in order to navigate their companies through crisis periods. I developed this topic because I thought it is important for you as a board member to develop the ability and to also know what is it that you can do from an oversight perspective should you find that the company that you are leading is in crisis. The approach that we adopted in developing these particular strategies was to look internationally and locally on some of the cases, both in the private sector and the public sector, of companies that found themselves in crisis and what lessons we can harvest out of that. I have gone and looked at the experience at SAA. I've looked at Starterfords. I have looked at Telkom. I have looked at Edcon. And I've also looked at ESCOM in terms of how management and boards managed crises or possible crises that they found themselves in. And out of this particular review and this particular work that I've done, I've developed about 5 principles or 5 strategies that can be adopted by the board in their oversight role should they find their companies in a crisis. But before we get there, what actually leads to companies being in crisis? That is a question that we need to ask ourselves. There is a misconception or a misunderstanding that says generally companies that find themselves in a crisis are companies that are in the wrong sector, the wrong industry. Not necessarily true. Our experience has shown us that companies that are doing well are likely to find themselves in a crisis or in a possible state of bankruptcy. Why is that the case? We have found that when companies is doing well, there's generally a pressure from the shareholder to maintain or increase that performance, either through increased production capacity, diversifying into new markets, new products, acquisition of other assets, or even acquisition of subsidiaries or other businesses. While that is also taking place, the banks as well, the lenders to that company, will also be offering funding or loans at cheaper rates. But the key thing is, this particular approach exposes the company to downturns in the market. Because in the background, competitors are also eyeing the same opportunities that your company is eyeing as well. Think about that. And then when it leaves your company exposed to the downturn, which eventually happens, downturns in the market, you find yourself that your margins are under pressure. Your market share is also under pressure, and you are unable to service your debt. More importantly, unable to service the dividend that you will have loved to pay to your shareholders. Sometimes we find that companies that are doing well find themselves in a crisis is because when the innovation and technology space changes the market structure, the company fails to adapt, and very often that leads to themselves in being in trouble. The other reason that we find these companies being in crisis is that in a culture or where you are doing very well, you find that these companies, then you get a culture that comes in, a culture of non-performance. You find that a culture of unethical behavior coming through as well. And that often can cause companies to regress. So these are some of the things that we've picked up on the market on why good companies became bad. I'm not saying all the companies will eventually get into a crisis, but we know that in a market full of competition, challenges, regulatory compliances and changes, it is not very rare that you find some companies sitting in a crisis. Now let's get into these strategies that we've picked up around turnaround strategies. The first one is to realign or reassess your balance sheet. Instead of focusing only on the cash flows of the company, I say look at the balance sheet holistically I'll get into the details now. The second one is stakeholder communication or engagement. You can call it buy-in if you like. This one ensures that you have taken out all the key stakeholders into consideration in terms of what you are doing by communicating. I'll discuss this later as well. The next one is around culture. Very often we focus on the financial numbers and we ignore culture. We'll talk about that as well. The fourth one is to realign in your strategy. The overall strategy of the business, we will talk about that as well as we proceed with this session. The last one, which is the one that really makes sure that all these four holds together, is around your ability to make bold decisions when it matters. And we'll also deal with this as we proceed with our session. First strategy I want to talk about is around the reassessment of your balance sheet. A lot of times we find that practitioners or boards, when they look at turnaround strategies, they tend to focus a lot on the cash flow. While it is important to focus on the cash flow, but it can sometimes be an unsustainable way and a very short-term way of looking at turnaround strategies. By looking at the balance sheet, you've got a holistic and a global view of what could be done in terms of rescuing this company. But before you open that balance sheet, I recommend that you investigate the solvency of this particular company or the company that you lead. The solvency investigation will give you something like this. It will tell you whether there is enough assets to really salvage or save this particular company. If the answer is yes, then you proceed with the next step of reassessing the balance sheet. And how do you go about doing this reassessment? First of all, the one section of the balance sheet that is important is the balance between debt and equity, which is capital, which is also called funding. And when you look at this particular part, you gotta look at, are you highly geared or highly leveraged? And if the answer is yes, you need to look at how you can re-engineer this debt. You can renegotiate terms with the lenders so that you either get payment breaks or you get either lesser terms that are much more favorable to you. If that doesn't work, you can also consider issuing additional shares to the current shareholders in order to raise funding. If that doesn't work as well, you might also consider looking at converting this debt into equity, depending on the appetite of the lenders to be part of the equity of your business. That is the funding part that you can look at by reassessing your balance sheet. The next part of the balance sheet is the asset section. This is a very interesting section. And this section, I always say that you are now looking for superheroes. What do I mean by superheroes? You have to investigate and understand the nature of the assets that you have. For example, if you've got non-core assets, you might consider selling them out of the business so that the cash that you raise out of selling this non-core asset, you can then use it either to pay off the debt or to find a way of restructuring the business. The next part is the non-performing assets. You have to also reinvestigate this non-performing asset as you are searching for these superheroes. Because out of those non-performing assets, you might find that there are some assets that you can really turn around to be super performers. And that's why you need to do a detailed study of your assets. Extremely important as well. One of the things that you need to look at a balance sheet sometimes is the working capital management. Often companies don't necessarily get into crisis because the market has changed. It's just because poorly they manage their working capital management. Look at the relationship between your receivables and your creditors, also including inventory. In accounting terms, they call it a cash management cycle. How good is your cash management cycle, and are there any approaches you can use to develop that? Some of the approaches you can think about are issues around renegotiating terms with your debtors and your creditors so that you can make sure that you've got much more balance of cash in your bank account than it's sitting outside committed in inventory and also sitting with debtors. That is the reassessment and re-engineering of your balance sheet. We can always go into much more deeper details, but because of time, I'll limit it to those aspects. Forward. The last part of our strategy, which is a very important one, sometimes neglected and sometimes taken for granted. Item number 5 is your ability as a board or as executive to make bold decisions. As much as you're going to be involved in consultation, you're going to be involved in engagement, but you need to make sure that when time comes or when it counts, you take bold decisions. Can I then say this? A crisis is a very difficult situation to manage. And I can assure you that often the same thinking that brought us to this particular crisis should not be the same thinking that you are going to use to try and get out of it. Hence the requirement to make bold decisions. What are some of these bold decisions that you might need to make? You might find yourself needing to remove the old management to pave way for new thinking if necessary. You might find your way sometimes having to go to courts where creditors or sometimes even employees and trade unions are challenging the position that you want to take as a board or as a turnaround practitioner. But you gotta make those particular bold decisions. And bold decisions don't necessarily mean that decisions are 100%, but it means that you are making decisions and you are giving direction to this particular company. That is item number 5 in terms of closing up these particular 5 strategies that boards can use to exercise oversight. Just to review them again, is to reassess the balance sheet, is to look at stakeholders from communication, buy-in and engagement point of view, is to also look at the culture within the organization, because we said culture can bring you to your knees and can also make you a superstar. The 4th one was the issue around relooking at your strategy, repositioning, getting into new markets and possible acquisitions in order to access new opportunities. And the last one is around really making bold decisions when it matters. I hope you have enjoyed this particular session, and I hope you are looking forward to the next sessions that we'll have around board governance and oversight. If you liked this session, please click the subscribe button at the bottom of this particular video. If you want to get into more details around the subject of turnaround strategies for boards, please drop us an email on the email provided in this particular video. I thank you for your audience, and I'm looking forward to more questions and more interaction with you